Well, good afternoon, everybody. This is Les. I want to say happy summer, happy early summer. I guess we have a few more weeks before we really get into the swing of things. First off, you might notice my, as Jason likes to call it, my broken wing here. Had a little rotator cuff surgery 3 weeks ago, but we are healing up, not as quickly as I would like, but we are healing up. So that's what is up with the sling. So if you haven't heard from me as much in the last few months, you'll know why. But we're getting better. Hey, you wanted to do an update today. It's the middle of the year. I can't believe that we are in June of 2023. And so Jason and I want to do a quick video about what we expect to happen maybe in the second half of the year. I'll recap the first half of the year a little bit, kind of give you some thinking about why we feel the way we do. First of all, 2022, as we know, was kind of a nightmare year from an investment perspective with the Fed raising rates so quickly. Stocks obviously did not do well, in particular the technology sector. Fixed income, which is usually our ballast in the storm, did not do very well with a rising interest rate environment. So last year, pretty much the only thing that made money really was cash and energy, because energy prices were up. So coming into 2023, we weren't expecting to come racing out ahead with the stock market. But quite honestly, kind of the opposite has happened. This year in 2023, the technology stocks that were so beat up last year have actually rallied quite a bit. The top 10 technology stocks this year are up 35%, okay? The rest of the S&P 500, the other 490 companies, are actually flat for the entire year. So it's been a very narrow performance band this year, and that's pretty unusual. Now, all of that said, you might think, well, these technology stocks have had such a great run this year. Are they going to turn around and go the other way again? We don't necessarily think so. We actually think that some of the enthusiasm for technology, especially generated by all the talk about artificial intelligence this year, will start to spill over into other parts of the economy. And so for that reason, we're not terribly nervous about the rest of the year, but we'll get into some more details about why that is. So far in 2023, we've had some bad headline type news, as you are aware of. First of all, the debt ceiling is the most immediate. That was resolved just last week, or 2 weeks ago, I guess it is now. And that was kind of scary headlines. And we've been through these before. We got through this one. So that's like a big, glad that's over. We had some regional banks have some issues, especially out in California, Silicon Valley. That issue seems to have subsided a little bit. So that's a nice thing that's kind of not overly concerning going forward. Inflation this year, we got our inflation report today. The lowest pace of inflation increase since I think it was May of 2021. So that's very good news. So inflation not as big a concern now as it was, say, 12 months ago. So that's kind of the news of 2023. Now, what does this mean? Consumers are 75% or 70% of they're spending 70% of their gross domestic product of this country. Consumers, as you may have noticed, are still traveling, eating out, still shopping to some degree. So the services part of the U.S. economy is doing extremely well still. The goods part of the economy, so that's buying things at Home Depot, physical things, those sales have really started to fall quite a bit. So people are still out and about, still traveling, enjoying vacation this summer, but they're not buying as many things. We actually call that the cardboard recession. Just about every facet of our economy is actually tracked. Well, we track the construction of cardboard boxes. The volumes of cardboard boxes are way down this year, which gives you an idea that we're not shipping nearly as many sofas and bikes and all those things you find at Walmart and Target. So the balance has actually played out okay. So the consumer's kind of hanging in there right now. However, with the interest rate increases that we've had over the past year, mortgage rates are higher, the cost of housing's higher, grocery store, we all know about the egg issue last year, prices are still higher, so that is starting to have an impact on the consumer. Going forward, inflation probably starts to continue to come down towards the Fed's 2% rate, although I don't see that happening until maybe 2025. I do think we'll get a Fed rate pause tomorrow, which would be great. That'll be supportive of the stock market. So overall, we think the rest of the year could be slow and steady and perhaps north. We're not hearing a lot of commentary about a recession really beating us up too bad. The recession we've been expecting for the last 2 years is probably going to be upon us in the fall sometime, but it should be extremely mild And as we know, and we've taught you over the years, the stock market's always looking 6 to 12 months ahead of what the headlines are in the newspaper. And so if it's going to be a mild recession, stock market's looking to 2024 saying, hey, if inflation's come down and the recession is mild and people are still working, and if they're working, they're still spending money, then we think 2024 could actually be a pretty good year. So that's a good summation of where we are. Consumers, I'll throw one more thing at you. The consumers are sitting on a bunch of cash. They are fairly bearish, still scared by some of the first half events that's going on in the markets. But I think as people start to reinvest in the markets, if we pick up some pace or some steam, the fear of missing out will start to kick in as well. You could have a whole bunch of investors come back to the market all at one time. That's another thing that may be supportive for the rest of this year in 2024. So with that, if you have any questions about any of the things I just covered, please reach out to myself. Jason, Maura will be glad to walk through these things, and otherwise have a great summer. Be sure to check out the new website, okay? And we'll have some new social media material coming as well. And with that, have a great summer. Thanks.